Hello everyone and welcome to Day Trader S&P 500. Today is Monday, March 7th, 2022. This is Dale Woodson, editor of Woodson Wave Report. We want to get you guys caught up, but before we do, I want to remind you guys we have a free weekly analysis of the E-minis and the NASDAQ. I think I've been doing it like 5 weeks now. Do it on weekends. So if you want a free analysis, just click on that and put in your email address and your name, and you'll be good to go. Okay, we want to get everybody caught up on what's going on. There's been a lot of movement, and I've been putting out for our monthly subscribers 3 and 4 reports a day, all hours of the night and early morning, because it's moving a lot and a lot of people get whipsawed, but we're getting targets, upside and downside targets within the day. Could be as late as 10 p.m. or 4 a.m. or 5 a.m. in multiple reports a day, okay? Well, I don't offer a trading service. I look at it as just math, and I'm publishing the numbers, and subscribers are using the make or breaks as stops and the Fibonacci targets for entries and exits, and doing quite well, which we'll show you shortly. But let me start with, to get you guys caught up on, I think it was Sunday. Was that the 6th? Yeah. All right, we did a pre-market open report about 45 minutes after the futures opened to give everyone the resistance and the targets. Okay, there's the downside targets and the resistance targets there. Okay, so then after that, we put out another report here on 6:45 in the morning before the market opened, and we want to update the targets there because I think. Yeah, we had a hit on our 42.35 target there, okay, and it came within 3 ticks at 2:30 in the morning, and so there were our retracement targets, and we put that out to subscribers. And then after that, we had a midday report at 11:15 in the morning, and you can see here, like I say, markets are moving too fast to send charts. We want to keep everyone up to date where the targets, resistance levels are, okay? So that one was achieved, and then we have targets on a 10-minute chart for the scalpers and the day traders, if you will, and then a 60-minute chart for the longer-term traders, if you will. And then since the move went the way we thought it would, we had a new resistance level here that we put out to our subscribers. Okay, so speaking of subscribers, they're pretty happy, giddy maybe. You know, here's a subscriber turned 25K into 112K. I think this time period is a week. He sent his trades. You can see 224 to 33. I think that's about a week. Anyway, he started documenting his short-term trades. He's killing it. He likes to see the midday updates are huge. Validation and confirmation points. I give validation. You know, the count is valid when it moves up here, excuse me, or down there, and vice versa with the targets. You know, upside and downside targets. Okay, I'll just scroll through here so you guys can see. There's somebody who made 12,000 before the market opened, and another 7,000. It's all in the same day, and I think it was another almost 4,000 there. Okay, and sold them all 38,000. And I will just scroll through here real quick, but you guys get the idea. I'll scroll through real quick and get to the end here, or close to it. Okay, here we go, and there's one made 63,000 with only 6,000 just in January. Lost 500K on her own. Anyway, all that stuff there. And sorry to scroll through it so fast, but you guys get the idea. Okay, so let's go to our chart. So I'm going to do the Qs today. Okay, we haven't looked at those in a while, and this has all the lines because I got the post-market and pre-market on there. We can see the Qs, just like the NASDAQ, they topped November 22nd. There's a 1 down, a 2 up, a 3 down, a 4 up to the 618, and then, well, I'm sorry, anyway, and a 5 down. Okay, we got to move up here. Let me do this. Let me get rid of the lines here so it's a little bit easier to see. We don't need the extended trading for this purpose. Here we go. Yeah, it's a little cleaner there. Okay, let's clean that up and move it around. Okay, so we have 5 waves down. There's the 382 retracement. Of course, it went right to it. Okay, so this could be A up and then B down, and we could still get a C up to any of these targets up here. Okay, so again, when we give targets to our customers, there would be confirmation. How do we know that wave 3 of a larger degree of trend, and this would be, let me put it in there for you guys, because it's a fractal. Okay, so this would be 1. I'll put 2 up here and then move 3, 4, and 5 over here, and I'll make that much bigger in a different color. We'll make it minor degree because that's bigger, and we'll make it a different color. Let's make it red. Okay, there we go. Okay, so this in black, this 1, 2, 3, 4, 5 is the larger wave 1 right here. Okay, so this is 2. We know that 3 is in play when the wave 1 low is broken. Okay, and I think that's right around 317, 318.40. Otherwise, this could be an A up, a B down, and a C up. Okay, and I'm going to look at that a little bit closer because I like what the Qs are doing. They're leading the way. As I said, this is, see, the other indexes are on a 3rd wave, and this is already completed 5 waves to the downside because it started earlier. It started in November. The other one started in January. Let me see if I can get a little tighter look at this here. Bear with me while I stretch this out, expand it, see what this is looking like here. Okay, I haven't looked at this since I was doing it live, and you can see the Qs are going. What time is that? Is that after hours here? Yeah, 15:40. Okay, there we go. Okay, anyway, we have a 1, 2, 3, 4. 4 stays below the wave 1 high. Very good. 4, 5, and then we've got a 1 and a 2 up here. Boy, I was messing with that here. Let me see. We got a 1, 2, 3, 4. Where'd the 5 go? There it is, 5 down there, and then A, B, C. Okay, there's 1, there's 2. Yes, breaking down in 1 with the purple. There's the 2 up, and here comes the 3. And here's where 3 will gain equality with 1 right here at 320. Does that break that larger wave 1 low? Not yet. Okay, so that'll play tricks with people. Then we would get a 4 up and then a 5 down, and I'd probably put that 5 on the 1618. Yeah, down there. Okay, so this is the larger wave 1 over here. Okay, we've got that in a different color in red, and that's the 5 waves that make up the 1 of a larger degree. There is the move up right on the 382. So we need to see this go down below that low for confirmation of the larger wave 3 in red. Okay, but it's looking pretty good here because it's breaking down in 5 waves, and that's a very small retracement up. And here we go. We'll see. Ideally, the 3rd wave does a 1.618, and it goes here, and then everybody knows that it's in play. It could stop here or here. All right, that's the Qs. Let's get into the S&P 500 here. We're looking at a daily chart, okay? And this is the all-time high of the S&P in January 4th. You can see we've got a 1 down here, a 2 up here, a 3 down here, a 4 up here. For the larger wave 1, that's off a little bit, but that was on January 24th. And then we had a make or break for this move up, and it came within 5 points. You can see 45.95, 45.90. I still say that February 9th was so huge. I know I've said it before, but I'll say it again. It held within 5 points in the futures and 1 point in the, 5 points in the cash and 1 point in the futures, which set up an unbelievable risk reward. Like here, your risk, if you're watching the market and you're going short here, your risk is 5 points, and your reward is 41.14 from 45.90. You guys do the math there. That's over 75 points to 5. Yeah, that's amazing. And we got a 1, 2, 3, 4, 5 for this one of the next degree, and then a retracement up right on the 618. So this stuff is breaking down perfectly in Fibonacci ratios and retracements and Elliott waves. A perfect 5-wave pattern to the downside, and then a perfect retracement up. Just like the Qs, this could be A, B, C for an A. This could be B, and C could still go up here. Make a double top, go up here. It can't go up there. That's the make or break for that other wave 2, which isn't shown. But I think I have a picture of it here. Okay, let me see if I do. I can get right to that. Let's see here is, yeah, that's where that C, oh, I wanted to point that out on that ABC. That's where that C target was. That was that second wave in purple, okay, from that 41.14 low on 224. Yeah, I may have put it in on this one here. Yeah, here it is here. Okay, so from that low, we had an ABC, and this C looks short. You can see the 618 was at 44.09, and it went to 44.16. It went above it, but not quite to the 786. But this is 5 waves, and I can break that down for you guys and show you, because it's a 5-3-5 pattern, A, B, C correction. And C didn't gain equality with A, and these move around when I move this around. My apologies, guys. But we have an A up, a B down, and this is 5 waves to the upside. So it's a 5-3-5. You can see it right here. 1, 2, and it subdivides 1, 2, 3, 4, 5 for 3, and 4 and 5. Another way to count those is 9 waves. If it's impulsive, 5 in the direction of the main trend, you get 5, 9, 13, 17 on up for impulse, and 3, 7, 11, etc. for correction. So down here on the S&P, this is the cash, by the way, we're looking at here. I'll spread this out a little bit. Okay, you can see we got a 1, 2. That's a larger degree of trend, and then the third wave extended or subdivided into a 1 down, 2 up, 3 down. There's that nice little sideways 4. You can always see the 4s, they're sideways, and then a 5. Okay, so that larger wave 3 here gained a 2.618 multiple with that 1. Okay, so we have wave 4 targets here. I think I got that on a pick. So the market could, okay, here's where it's at a precarious position. So the S&P cash and futures could retrace up in a 4th wave if wave 3 is happy with a 2.618 Fibonacci extension of wave 1. But third waves, especially third waves, which we have at least 2 degrees of trend, I've seen them in the past go 3.618 and 4.618. So we'll have to see, does this go up to these 4th wave targets up here? I'll see if I got them in the pick, or does it extend even further, since it is a third wave of at least 2 degrees of trend, if not 3 degrees of trend. Here I have that in the picture here, so these things won't move around. All right, remember this is 1 down to January 24th, and then 2 up to February 9th, and then 1 of 3, 2 of 3, and here's our targets here. And you see this subdivides from the March 3rd high, 1 down, 2 up. There's a subdivision or extension of this third wave, 1, 2, 3, 4, 5. This stuff is going perfectly. It's just unbelievable. Well, it's not unbelievable because it does, but anyway, it's perfect waves here. Okay, that's where 3 is a 2.618. There's the wave 4 targets. All right, that wave 4 there cannot go above that wave 1 low, which is 43.45. So again, we always ask ourselves, where are we wrong? This is wrong if this 4 goes above 43.45. Okay, and since this is a 1 down and a 2 up, this could still unfold to a bigger wave. We need confirmation we need to take out the February 24th low in all these indexes to have confirmation that a third wave down is in play, because it still could be, this could be a larger A up, B down, and get a C up. And that's a big difference when you're looking at 4400s, maybe even higher, and down here under 4000. So, but we have, that's what the beauty of Elliott waves are in Fibonacci. We have our make or break targets, we have our confirmations, we get it on a 10-minute chart that covers a couple months, and with the monthly subscribers, I do it on as low as 1 minute, but usually 5 or 10-minute charts to cover these huge moves up and down. I've seen 40, 60-point moves in less than an hour in both directions in the same day. So that's where we are today. We'll see what happens here. Okay, is this a third wave playing out? Will we get a fourth wave move up, or will we get an extension even further in the third wave? And will we take out this February 24th low? Okay, that's it for today. Until next time, take care, everyone.